Let us have a
Okay.
look.
Now streaming live. Let me receive the link so I can send it in the
Indeed.
groups.
Yep. Yes. So if you go right now to our live here, let us have a look. Amazing that I can hear myself. Okay, I'm sending it here in the chat, guys, and I am letting you get started and enjoy. And I will also share it
Awesome.
in our story as well. So
Yeah, I'm gonna create a quick reminder for the community and Discord. So, stuck. Send now. All right. All right, Fabio. Let me just quickly check YouTube. Yeah. All right, all right, all right. What do you say? Should we get started? Are you ready?
Yeah,
How's
just
the
gonna
market?
share the link. Just give me 1 second. I'm just sharing the link now.
Awesome.
Yep, perfect. All ready to go, guys. Let's go.
Awesome.
Can I share my screen?
Absolutely, absolutely. Let's do this. Let's do this. I'm sure you checked the markets
Fantastic.
already. What are you saying?
Yeah, I've been checking pretty much everything. Obviously a lot has been going on. I hope everybody can see my screen now as well. And everything
Absolutely.
is working fine. Let's give everybody just a few more minutes to join in. I just dropped the link as well inside our Discord. So everybody just has a moment to yeah to tune in and we can go over what's happening in the world, what's happening in the markets, and yeah, what major movements are going on.
That sounds great. That sounds
So it's
great.
been a
I'm
big
just
week
gonna,
overall.
yeah,
Yeah,
I've
sure.
seen that. I've seen that. Has been going great for the Trading Academy this week. The
Yeah, it's been a good
anticipation
week.
was
Yeah,
correct.
the dollar has
Everything
been
you've
pushing
analyzed.
down lower indeed. So yeah, was
Hmm.
myself in some NZDUSD longs and
Yeah,
currently monitoring just all the other major dollar pairs as well. NU is just keeps on pushing, as you guys can
sure.
see on my screen here. Looking for it to push a lot higher still, but I'll I'll touch upon that in a quick second. I see we now have around 42 people watching, so that's fantastic. Welcome everybody to the stream. Gonna be starting in a minute or two, and yeah, dive into pretty much everything that's been going on in the market. So 71 people watching. Let's get it to 100. Let's see if we can run it up, and then we're gonna have a nice dive in. So as soon as we hit that 100 mark, I'm gonna kick it off.
We are getting started. Perfect, perfect, perfect. It is
So let
actually
us know in
crazy
the
to see
chat.
how the dollar was melting, right?
Yeah, yeah. No, dollar has been pushing like a madman down for some very obvious reasons, but I'm not sure if everybody's informed on that. So
Sure.
I'm gonna dive into that in a second. I prepared some good information that kind of like recaps it all pretty well for everyone. So
Awesome.
that's gonna be good. Let us
I
know,
would
guys, in
say
the chat if you can hear us. TTA is here. Hey, Fabio Sharp. How you doing? I'm doing good, guys. Thanks for all tuning in to the stream. It's a pleasure to be here on the stream, guys. I'm here with Jan today, and we're going to be doing a nice stream. I can see on the I have YouTube open on my screen as well, so I can see that the image is shifting between ourselves. So that's good, guys. But I'm here with Jan from the Trading Pit. Obviously, we're on the Trading Pit YouTube channel. Sometimes, or for once, we're doing a little bit different than normal, and we're going to be talking about the markets today together with yeah, the Trading Pit team. So yeah, Jan, maybe yeah, I'm going to give a
Awesome.
quick intro on myself. Maybe you can also give a quick intro of yourself. I think a lot of people from the Trading
Yes.
Academy here as well. It's kind of like not completely announced live stream, but I think everybody who's here now is super curious to hear what we're going to be talking about today.
Absolutely. I've been waiting for this day to come for a very, very long time, Fabio. It's awesome having you here with us. To our community, to the TTA community, today we want to introduce you to a new TTP community, the Trading Academy. I had the chance to meet Fabio, his team, and also the community at a fantastic meetup in December 2024 in Amsterdam. I have to say, like you guys, you really have created something extraordinary here. It's been a pleasure, the cooperation so far, everything that we are building right now. And yeah, on top of that, you recently hit a major milestone, 100,000 followers on YouTube. We've been celebrating this together, but congrats on that side again. Many are probably wondering, like, what kind of content or value do you need to provide in order to reach such an impressive number? Fabio, first of all, how are you doing? And secondly, what's your secret, man?
Thanks, Jan. Thank you for the great introduction. Yeah, again, guys, I see more and more people are joining in, so thank you very much for tuning in. For the people who know me, for the people who don't know me, my name is obviously Fabio. I am yeah, pretty much just a normal guy here from the Netherlands, originally born in the United Kingdom, but moved to the Netherlands. I think around what was it now, like 10 years, 12 years ago. And back in 2021, I started becoming profitable in trading, but I decided it's time to just document my journey, talk to somebody about what kind of setups that I'm seeing, what I find interesting about the markets, and what potential trades I'm trying to take. Because trading can obviously be very lonely. So in the beginning, I was just recording some YouTube videos, man, just daily market updates, me talking to myself. In the beginning, it was like I had like 10 viewers, just my mom, my dad, myself, my brother, and then myself probably like on 5 different accounts, giving myself likes, just hoping that I'm going to get some more subscribers. And then, yeah, pretty much just by consistently posting every single day what my view was on the market, I was blessed enough to see the YouTube account grow. And yeah, we've never stopped ever since. So what's the secret? I mean, there's no secret, guys. Consistency is the recipe for success. And that's what I've been doing for years now. As you guys can see, I've uploaded over 1,050 YouTube videos now in the past 4 years, of which I think around 800 are daily market updates where I just talk to the screen myself every single morning, walk myself through the market and try to explain to myself, okay, what do I want to see from the markets to potentially get in? And that's what we're going to do here as well today. I'm just going to give you guys a quick run through of what my view is on the markets, what I'm currently looking at, and yeah, in addition to that, some fundamental updates about what's happening and going on in the world, because it is very turbulent times for the markets, and I think everybody needs to be well informed on that. And by coincidence, actually, today I gave a massive update inside our Discord community. So for who again does or does not know, we also, next to the fact that we have a YouTube channel called the Trading Academy, we also have a Discord community where we just send free market updates and what our views are as a team. We have an amazing team with around 10 to 15 individuals who all share their views on the market. So it's obviously not just me, but it's a whole team of people who are willing to help everybody on a daily basis. So that's pretty much what we do, and yeah, what I'm going to be explaining today. So if there's any questions, obviously feel free to ask in the chat at any point in time. I'm here just today to help you guys navigate the complexity of the markets at the moment, and yeah, let's just have a quick dive in. So for anybody wondering, most of the people probably know, but I trade the major dollar pairs pretty much only. I made that massive transition, especially at the beginning of this year. I've pretty much actually always done it, just only focus on the major dollar pairs every single morning in my daily market updates as well, just because I like to keep it nice and simple. At the end of the day, we call ourselves day traders, and everybody thinks that they want to become a day trader, but the day trader term, I think, is a little bit overrated in the sense that day trading gives you the impression that you're trading every single day, whilst if you look at it from a reality perspective or from a real perspective, you're actually only trying to be in the market, let's say once or twice, maybe a week, or sometimes even every 2 weeks, like myself. So for example, since the beginning of January, I've only taken around, I think, what is it, like 10 or 12 setups, of which around, I think, 60 to 70% of those were winners. So I've been performing very well this year. In the past 2 months, I'm up around 13%. So that's on average around 6% a month, which is for me amazing. Again, a lot of people think that they need to achieve at least 10% a month. Obviously, that's a target to pass the prop firm challenge. But at the end of the day, you should compare yourselves with with the best in the industry. And if you see that most banks, most hedge funds, most whatever are just giving investors returns of, let's say, just 2 or 3% a month, you're already extremely outperforming the market standards by 100% by doing 6% a month, right? So you need to let that sink in and understand what actually profitable trading is about. And profitably trading is all about keeping composure, keeping peace within your inner self, understanding that you need to strike like a sniper. The market is literally like a target, and all you're doing is trying to snipe that one setup, which is going to pay you that 3% return, which in turn again will bless you and will bless your entire month. And that's also how I approach trading with prop firm accounts myself. So I'm funded myself over $1 million US. So I trade on $1 million US in funded capital. But does that then mean that I just take, let's say, one trade on all these different accounts? Because obviously I don't have $1 million on one single account, but I trade many different accounts, including obviously the trading pit as well. And what I then do is that I split my trades into these separate different accounts, so that I also spread out my losing streaks, I spread out my winning streaks. But that again, trading becomes something that I can do very consistently. And this makes me, or has enabled me, to be part of the top 0.5% of traders in the world who trade with prop firms, because I've been trading with the same prop firms already for, I think, over half a year now on the same accounts. And this is now also enabling me to share the story, to spread the word of how to properly trade, and why I'm blessed enough and why I'm lucky enough that the trading pit has again, what I'm very thankful for, has invited me here to speak today, to share my view on the market. So let's just dive into the market, see what's going on, and see what has been happening. Because guys, we have been seeing a dump down on the dollar index, guys. What we can see here is that the dollar has been pushing down lower, and what is very interesting to see at the moment, and we're just going to start from a technical perspective, and then I'll dive into the fundamental perspective of it all as well. So what has happened? Well, obviously everybody's aware of the person who is currently in office in the United States, and at least if you're not aware, then you've been sleeping pretty hard. But what's important to understand is that we look at where we are currently positioned on the dollar index. So the very first thing that I always do is I look, okay, what is the dollar index doing and what is the dollar index telling me? Because again, my major focus is on the dollar pairs, but in general, the dollar is what drives the markets, right? Global commodities are traded in dollars, crypto is traded in dollars. Everything is in dollars, guys. So you always need to be aware of what the dollar is doing, because at the end of the day, that is going to cause the market to go up or down. If you look at Euro USD, if Euro USD pumps into the moon, then most of the times the other euro pairs are going to be pumping as well. If Euro USD dumps, the other euro pairs are going to be dumping as well. So that's very important to understand. So what we can now look at is, at the moment, back in 2016, around November over here, when Trump came into office, the year prior, or the 2 years prior to him coming into office, we saw a large period of consolidation. Now, fast forward into this, when Joe Biden was president, again, since 2022, so again 2 years prior to Trump coming into office, we can see that the dollar index has been consolidating. So overall, what I've been looking at and been analyzing here is, okay, the moment that Trump comes into office, everybody is assuming the dollar is going to be bullish, right? So we've seen that dollar bull rally in towards the highs on both occasions with Trump coming into office, because again, everybody thinks America first means dollar up, but that is not necessarily the case. There's obviously a lot more to it. Again, what a lot of people underestimate and do not understand is that the dollar doesn't just move because an NFP number is bad or good. Obviously, everybody here on the stream has heard about NFP news before, but there's a lot more to it. It's not that we see a bad NFP number that then means the dollar is going to dump. Obviously, it could be a temporary dump, but you need to look at a lot more factors, right? So what we can now see here is that the dollar kind of gets that area of consolidation 2 years prior to that breakout, right, over here and over here. So again, it's exactly 2 years here. You can see pretty much that 2015 all the way into 2017, here again as well, 2022 into 2024. What we then see is that fake out that fake out, and now I'm looking for that dollar reversal in towards the downside, which in my opinion will also cause global markets, so the stock markets, US 100, US 30, whatever, also crypto, especially Bitcoin, now to see another rally in towards the upside. So this is now what I'm looking at, what my estimation is for the dollar. So how can we translate this back into other pairs that I'm currently analyzing? So my main pairs that I trade are, for example, Euro USD. And let's have a look at what the euro has been doing. So the euro has been pushing, guys. The euro has been pushing very, very hard. Now, what I want to talk about before I dive into the technicals of why Euro USD has been pushing, you need to understand that the technicals only allow us to enter a market at any point and given in time. What you actually need to be focusing on are the fundamentals, right? Because the fundamentals are going to drive the market into your, let's say, point A where you enter, into your point B where your take profit is, and then you just use those technicals to time that entry. So Germany has made a massive move, guys, because they have now amended their constitution to exempt defense and security spending from fiscal limits. So what they're now doing is that they're investing 500 billion euros into an infrastructure fund, which will boost sectors like transportation, energy, housing, and the EU is also going to lend them an additional 150 billion euros in defense loans, which has now caused a lot of companies in Germany to start pushing harder and harder. So personally, I don't trade it, but if you look at German 40, so this is obviously the German market, right? You can see yesterday evening, right? So last night, so this is Wednesday evening, that the German 40, so the top 40 companies in Germany, have been making a massive rally in towards the upside. And this was based on this massive shift in Europe's economic strategy at the moment, where governments are not just talking about printing money, but they're actually now doing it, right? So this is also what we're now seeing in the euro, right? So we're seeing a massive impulse in towards the euro across the board. So Euro USD has been pushing up higher. Euro AUD has been pushing up higher. Euro CAD has been pushing up higher. Euro NZD has been pushing massively in towards the upside, right? All of these euro pairs have been pushing in towards the upside. And this is because investors, traders, whoever are all buying euros because they are assuming now that Europe is kind of coming together, right? This isolation politics that Trump is now at the moment doing, where Trump is kind of like isolating himself from the rest of the world, right? He's saying, okay, I don't like you tariffs. I don't like you tariffs. I don't like you tariffs. Like, I don't care about what Trump does, obviously. First of all, I'm not American. And second of all I care is what it's going to do to the markets. So I understand that this isolation policy or this isolation politics and this stance is kind of like putting them away into a corner where Europe is now uniting itself and kind of benefiting from the chaos that Trump is now bringing to the world. And furthermore, the US is facing its own economic challenges because Trump is now aggressively, very aggressively imposing this tariff strategy where he tried, for example, to pressure China. But now China is sending a very strong message back. If we look at the dollar against the Chinese yuan, don't know how to actually pronounce it in the correct way, but I think most of you understand which one is it. Sorry, guys, I'm looking at too many monitors at the same time. But we can see that the Chinese yuan has been pushing down nearly a percentage point or a whole percent in towards the downside, right? So we're seeing, again, a lot of strength come in from China as well. And the main reason for this is because China made a very, very strong message. First of all, they responded by doubling down on economic expansion. So they raised their target of GDP growth for 2025 to 5%. And to meet this goal, China is now going to inject massive liquidity into its economy. And this move is likely going to weaken the Chinese yuan in the short term, maybe, because obviously when you print more money, what happens? The supply becomes bigger. And then if the demand doesn't go up with it, a currency becomes weaker, right? But in the long term, what this means is that we're going to probably see a lot of capital flow into China, as opposed to, for example, the United States, which should, again, push the Chinese yuan higher and the dollar down lower. So China has pretty much said to the United States, like, screw you, or we're going to go all in and bring on the war if you want to make a war, because we're ready for it. So the United States is kind of coming, instead of being the bully, they're now kind of like transitioning into a phase where they're being bullied. So it's very important to understand, what that does to the markets. But this has now been putting pressure on the dollar. Now, furthermore, I'm also looking at other pairs such as NZDUSD. A lot of people here on the stream probably are in longs as well, or were in longs. Myself, I was in longs at the beginning of the week. Main reason being is because last week we saw a very strong sell-off. Does it make sense for NZDUSD, for example, to push down lower? Now, personally, how I trade is I use supply and demand, I use market structure, I use liquidity, and I use, very simple said, premium versus discount. So I use a very simple strategy, and I just use those fundamentals to understand where market is trading, and then furthermore, I also just use common logic. So if we look at NZDUSD here, I'm just going to get a different broker feed or data feed, so it's nice and clean. And you zoom out here on NZDUSD, like you have to understand where we are trading, right? And again, it is not crypto that we're looking at. So it needs to make sense for a market to go up or down. Like with crypto, everything can go to zero, but obviously in Forex, this is not the case. So what we see here on NZDUSD is that we're at a multi-level of support or a multi-monthly level of support. Like this is a very important level for NZDUSD, which it actually needs to hold. And I'm not assuming, or I don't assume that they're going to let it go a lot lower. You can see the last time that we were this low was the financial crisis back in 2009. And we're now at a level here where we have a one low, a second low, and a third low. So now what I understand is, okay, we're kind of like at this monthly level of support. I understand that the dollar index is faking out and pushing in towards the downside again after Trump has now assumed office. So it makes sense for myself to see a deeper correction on the dollar. And therefore, if the dollar pushes down, that means NZDUSD up. I understand NZDUSD is trading at that level of sorry, guys, I'm just switching in between charts. I understand that NZDUSD is trading at a strong level of support. And then what I identify is just simply my technical analysis entry model. Okay, so what I understand here is that we see a very strong push in towards the downside here. So this is the so-called impulsive phase. Now, what do you expect after an impulsive phase? Very simply said, you expect a pullback, right? How does the market move? Very simply said, everybody understands it pretty much. It moves in a trend, right? Because the market can never move just in one push down, because at some point in time, people need to take their profits, right? So the way that I view it is that I just look, okay, where's the market currently trading? So we've had an overextended push in towards the downside where we broke market structure over here. So we break the market structure. Then what I simply do is I understand, okay, well, let's say at least 60 or 70% of the time, the market will at least retrace into the 0.5 fib, right? So we're now looking for a 0.5 fib retracement level at least, for example, on NZDUSD. Then there are different ways how you can understand that a pair is ready to retrace, okay? So the thing that I mainly explain to everybody is very simply, we need two things, okay? So we need two things to understand that a pair is ready to potentially retrace either back in towards the upside, or if it's ready to continue in towards the downside. So method number one that I understand, okay, a market is ready to pull back up is number one, you need an area of supply or demand, which is just called S&D. And then number two, and this could also, by the way, be liquidity. So I just call it liquid. Or number two, you need a MSS. So a lot of traders will probably know this from YouTube videos or whatever, but you need a market structure shift, okay? So when the market comes all the way back down into a supply or demand zone. So for example, over here, we have a demand zone. There's demand in the market over here to our left. Why is there demand within the market? Well, if we look, for example, on a lower time frame being, let's say, the daily, and I look back here, I just view it very simply said as this: impulse down, then we see a corrective phase, and then we see a strong impulse up. So the way that you need to interpret this is just, okay, we have an impulsive phase where there is a lot more supply than demand, which causes the market to go down. Here we see accumulation. In an accumulation phase, what happens? People start buying, or they start selling, but they start accumulating. This is where orders come together. And then again, you see redistribution where the market pushes back up higher again. So what you simply want to be doing is you want to be identifying these key levels within the market where the market consolidates. Because in an area of consolidation, that is very likely where people are getting into a position. For example, here you see a push up, then you see push down, you see push up, you see push down, you see push up, push down, push up, push down, and boom, at some point in time, it breaks out. Why is this? Because demand is a lot larger than the supply. And this is just very simple supply and demand dynamics. You need to understand that when there is more demand in the market, it will let the market go up, right? If there's more supply in the market, it will make the market go down lower. So in this particular situation here in the market, there at some point in time, like here, demand and supply are in balance. So people are buying and people are selling to those buyers. That's how you just have to view it. But at some point in time, boom, we shoot up in towards the highs. And that is because there's a lot more demand than there was supply at this point in price. But what you need to understand is that there was still demand here. It doesn't mean that the demand is gone. Okay, so people still have buy levels here at these levels. So what I expect is that in the future, when the market comes back up or comes back down into that demand level and we take it back to the right, the market will again move consolidatively, or will consolidate at that particular level, and then again accumulate before another distribution phase. So for example, here we distributed all the way in towards the downside, then we come back up into, or back down in towards that past area where the market consolidated, and then there you expect again a new phase of accumulation to happen before we redistribute and you start pushing in whatever direction. Okay. So what I then do is I understand, okay, the market is inside an area of demand. I'm going to clean up my chart a bit for you guys. We understand the market is inside an area of demand, okay, there to the left. Now, how can you then time your entry, right? Because I understand, okay, the dollar index is in my favor. We've seen a massive overextended move in towards the downside. The market comes down into an area where it can start to accumulate. So what I expect from this level here is either the market is going to start pushing back up and then, for example, continue down, or the market from here is just going to continue accumulating and then keep on pushing down lower again. All right. So this is what you need to understand. Like the market is not just always forever going to move like this. The market will move like this, then we'll reaccumulate. And then from here, we're either going to go up or we're going to go down. But I understand that the market is at an area in price, right, where we have accumulated in the past. So I expect this again to happen over here. And then again, also taking that dollar index into consideration, for me, it just makes so much sense then to push up higher. So this is the easy part, right? The easy part is analyzing. And I always receive this from a lot of people. Like they understand how to analyze a chart, but then when it comes to kind of like entering or like trading, actually, that's where everybody gets into problems. Because anybody here on the stream, I think, and you guys can agree with me, everybody finds it easy to understand how a trend works, right? Everybody understands a market is going to move down like this with lower highs and lower lows. And everybody understands in an uptrend, it's going to move up higher with higher highs and higher lows. But the hardest part for a trader is actually getting into the action, right? Because how many times does a market go in your favor into a certain direction, but then just hits your stop loss before then again moving in your direction, right? So this, for me, what I started to do to kind of like counter react against this, or prevent my stop loss from getting hit so many times at the times when I was not profitable, was that I made a shift into swing trading it more. Okay, so not focusing so much on the lower time frame, because again, the analyzing part went so well for myself, but then somehow the trading, I wasn't profitable, because I understood, okay, here for example, NZDUSD, I wanted to push up higher, like I want to be in this move. But then what I ended up doing is, and a lot of traders do that, is they start day trading. So then they go into the 15-minute time frame, for example. And then on the 15-minute time frame, what did they do? They, for example, say, okay, here I, for example, have a break of structure up, right? So everybody sees this, right? So we see a push down, pull back, push down. Then we see a break of structure up. And then, for example, what they say is, aha, here I have an area of demand. So now I want to go long over here. And then they place a stop loss underneath the demand zone, and then they get stopped out, right? And then you're like, oh, damn, like I should have been in that long position. Like I want to be in that long position. But again, like you can be in that long position, but if you just widen your stop loss a bit and you trade the actual kind of like real, let's say, fundamental push, or the real push, you can see there's still a very easy 1 to 3 risk to reward to be gained, right? And then still, again, you analyzed it correctly, but then your stop loss never gets hit. So this is always what I try to explain to people. And then again, this move happened here from Monday, 3rd of March into what? The Wednesday, the 5th of March. So it just only took 2 days. But in those 2 days, you at least make a 3% return instead of trying to squeeze out a 3% return in 10 minutes. And then again, you need to understand, like, day trading is like, it sounds so fun, but at the end of the day, you're going to hit your stop loss so much more instead of, or as opposed to if you're, for example, a swing trader. So I always tell people, like, focus on that swing trading part of things, and that will then in turn really ease your journey into becoming a profitable trader. And I don't say you need to like hold positions for 2 weeks or for 3 weeks, but at least kind of like focus on the actual move at hand. And don't get caught up in that lower time frame price action where you're kind of trying to be a champion and follow those people on Instagram who say, oh, you need to get a 1 to 30 risk to reward or whatever to make a 30% return. Like, that's not the goal. The goal is just to be like myself, $1 million funded, and then what like do 3% return a month, right? Because 3% return a month on $1 million is a lot of money, obviously. So that's how simple trading can then be. And then all I need now, because like literally, I'm going to break down this trade for you guys that I did on NZDUSD, because here on NZDUSD, like I've already explained the higher time frame, so I don't need to do that again. But here on NU, what I understood was on the 4-hour time frame, I look at something called fractal structure. So I look at the structure on the individual candlesticks. So I identified here that low break, which we just discussed as well on the lower time frame. Here I identified a high break. Then here I identified my area of demand over here. And again, if you go into the lower time frame, it will be a little bit easier to understand. You can just take the entire sell before the buy over here as your demand zone. I just call this order flow. And order flow is just simply following the overall sell before the buy, right? So instead of taking like a very small refined zone, I just take the entire sell before the buy up, sell before the buy up. Because at the end of the day, if you expect the uptrend to hold, like the market structure should hold and the order flow should hold. So again, don't try and be the hero and like refine all your demand zones and be Mr. Smarty. Like there's no need for that, you know, like just understand, okay, this is the order flow. Then simply what I do is inside of the demand zone, I identify new demand that is then created. So at the time, what I did here is that I looked, okay, the market retraces into my demand zone. So at this point in time, I'm interested to get involved with a long position. Now, what I do here is I understand here we have a low break. And at that point in time, this here is kind of like my immediate high, right? So we're seeing kind of like an internal downtrend inside of this order flow demand zone. And now you're just simply waiting for a demand to be created inside a demand. So what I now see over here is I see, okay, push up, meaning again, we have a new demand zone created. So now you have a demand zone inside a demand zone. And this is kind of like where you can really create your breakthrough in trading, understanding this. And then you just place your stop loss nice and safe underneath this strong low. And this is a strong low. Why? Because it broke market structure. So strong lows are supposed to hold. Market structure is supposed to hold from this point onwards. And then what you see is that that reversal in towards the upside comes. Then we see the retracement. So don't be afraid because again, we see a market structure break. So as long as this low over here holds, the market should again push up higher from the demand zone. And then what we see is that the market again continues up higher from that demand zone. Again, it retraces a bit, but then continues up higher again. And then again, here you see the break of structure. Again, this is the entire sub for the buy, which is my demand zone, which is my order flow. This here is your low. This is your high. Market is perfectly just retracing down lower again in towards the 0.5 fib over here. And then from there again, we continue pushing up higher. Like as simple as that. And now with that safe stop loss, instead of getting caught up on that 15-minute time frame, you actually make money on the move that you already anticipated. And that's how you come or become a profitable trader. So like with this 3% return, I make $10,000 like literally within the space of 2 days. And then I'm just done for the month. Like I can just enjoy my life. I can read what the market is doing. I can go in depth on the fundamentals of things, and I can actually do what I love in life, which is enjoy life a little bit more. Because that, at the end of the day, is why we're all trying to become a trader, right? You don't want to be a trader because you're sitting 5 hours behind your screen identifying SMT, ICT, SMC, 50-minute demand, liquidity, blah 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 blah. No, like it can be as simple as this: just identifying the market structure, the supply, and then understanding the dollar dynamics. Okay, the dollar is going to be weak. Why? Because of this and this and this, and then just take that trade based on market structure. Like trading is that easy. The problem is that everybody on social media tries to overcomplicate it for everybody, so that they buy some kind of expensive course or whatever, right? But that's not what trading is about. So that's kind of like a big lesson that I want to give everybody today on stream, like how simple trading can be. And I've seen a lot of interviews from prop firms everywhere, also here on the Trading Pit. Like at the end of the day, if you watch the interview here on Trading Pit, like with profitable traders, what they explain is always like trading is simple, okay? I've seen people make millions of dollars with support and resistance lines because I don't like, I always say, and I joke around obviously, and I mean, a lot of people kind of like make a joke of it, like support and resistance does not work. But in essence, like obviously like like what does work, what doesn't work, right? Like here we have like a level of support and resistance, and yes, we see the market bounce. Well, obviously if you like take a sell here and you place like let's say we sell on top of this support and resistance level and you place your stop loss above it, like obviously you see like the stop loss gets hit, but at the end of the day, like the support and resistance level, it does hold. So all you need to do is kind of like add some more confluences into the basket to understand kind of like how to enter that trade. But yeah, I mean, as you can see, I can talk about these kind of things for hours because I've seen it all, and it's very interesting. Yeah, I mean, I think for everybody to listen about it, and I'd love to hear some questions from you guys as well, if you have any. Obviously, I'm not saying that you have to have questions, but if anybody has any questions, let me know in the chat because yeah, now is your time and your moment to ask from somebody who's done it all, you know.
Maybe also something from my side, Fabio. Great explanations. I mean, I hope it is kind of clear for our community how you work on the markets and you know what you want to make clear here. This strategy that you're talking about, demand, supply, it really looks, you know, like you would be able to also add to positions. And I know from myself and also from, you know, a lot of traders at TTP, you know, adding to position is kind of it is something advanced. It's something that you shouldn't start right off with, and then there's this saying, never add to a losing trade. How do you go about adding to positions? Because when I saw the NZDUSD trade, there were possibilities of adding up. So how do you do that?
Yeah, definitely. So good question. I think there's a few things that you need to look at when scaling into positions. Again, I trade the major dollar pairs, so I need to understand what it takes and what enables me to scale into positions. So first of all, what you need to understand is that when you're trading, for example, the major dollar pairs, is that Euro USD is always going to be king. Euro USD is going to decide where the market is most likely going to be heading next. So what you can, for example, see here on Euro against the dollar. Okay, so now let's have a look at what's happened this week. So we've seen an increase here on euro dollar of around 345 pips, and it's up 3.32%, right? So when was the last time you saw such a large candlestick? Like, let's see here on the chart. I think pretty much the last time that we saw such a large candlestick was maybe over here back in 2022, 7th of November. Yeah, pretty much a candlestick as big as this. So you need to understand, like, in 2 years, we haven't seen such a big candlestick on Euro USD. So when I understand, okay, euro dollar has kind of like already made its move, I understand, okay, well, we're nearing also an area of supply over here, or we've taken out liquidity above like an internal high over here. So I say this is, for example, a liquidity high. I understand this is a supply zone. Like, these levels can cause like pullbacks, right? Because the market, again, is never going to just continuously keep pushing up and up and up. So that's kind of like the first thing that I look at when looking to scale into positions. Because if I go into NZDUSD now, like, I could say NZDUSD here on, let's say, the 4-hour time frame. Okay, so on the 4-hour time frame is ready to start, let's say, taking out market structure and break this high over here. Let's say that. So we have a lot of descending highs here, which I call liquidity again. Call it how you want to. I don't really care. Like, you could say it's a trend line, whatever. There's liquidity. There's something. There's a magnet. Let's call it a magnet. I know it's a pretty ugly magnet, but I think everybody understands. Like, I call this a magnet, and this here is pushing or pulling the market up higher and higher. Okay, so now I'm looking to scale into this, let's say, position on NZDUSD. So I took two positions, one over here, one over here, and now again I'm looking to scale in on the demand zones, on the market structure up higher and higher. So what I'm now looking to do is scale in on that NZDUSD position. But what I need to do is, before scaling into that position, I need to understand where Euro USD is. Because if Euro USD is going to, let's say, after this massive impulse, start pulling back, then most of the time it's like NZDUSD will also pull back, but then pull back even harder. So you see, for example, over here, this massive drop off of around 3.23%, which happened between the 21st of February and the 28th of February. If you then go into euro dollar and you look at the 21st to the 28th, that was over here, right? So if you look at this comparable situation, here you see on Euro USD, it dumps minus 1.57%. If we then look at NZD USD, you can see again, like I just mentioned, a dump of what? Of 3.16%. So always understand that when you're scaling into positions on whatever pair it is, you always need to look at kind of like who is the king of that currency pair. It's the same with crypto. I'm not sure how many people here on stream are familiar with trading crypto, but what you'll see is that, let's say Bitcoin goes up with 10%, your altcoins, they will go up with 5%. If Bitcoin dumps with 5%, then your altcoins will go down with 20%, for example. So the same is kind of applicable to Forex, where you need to look at, okay, Euro USD is king. You need to understand, okay, if I want to scale in over here, then it's important that Euro USD has already made a sizable retracement. How sizable is that retracement going to be? Where is it going to be towards? So for example, now on Euro USD, right, let's say I expect a pullback to now happen from this area of supply here on the weekly time frame, right? That's kind of like the next barrier for Euro, where I expect some form of resistance to be found, 108 approximately. Then I'll be looking for a pullback. Then where do I look for a pullback into? I look for a pullback into, let's say, this demand zone over here. So I understand, well, Euro USD can dump, let's say, at least another, what is it? Let's say 2.21% or 2%. But that means that NZDUSD could potentially pull back down 4%. So then I understand, okay, I need to take this into consideration when scaling into those positions. Oh, is Euro USD inside of this demand zone over here? And then NZDUSD, let's say NZDUSD didn't, because obviously the market is never 100% certain, or you never know 100% of the times what's going to happen. But if then Euro USD is trading over here inside of that demand zone, when Euro USD is trading inside of that demand zone I just explained, then I know, okay, this is a good time to potentially enter a trade. I also then look, okay, what is the dollar index doing? And like this, like, again, you need common logic. That's what you need to apply.
Absolutely. Super great. That sounds awesome. So there was a question in the chat. Timmy asked if you could check out gold for him. He's looking for positions. Maybe we can, yeah, do a like top-down analysis of gold right now together.
Yeah, sure. Let's have a look. So looking at gold, what has happened? Let me zoom out here on the daily. So overall, what's happening now in gold? First of all, we need to understand like why has gold been pushing, right? So gold has been pushing for several reasons. Obviously, a lot of uncertainty in the world has been going on. Situation between the United States and China, uncertain. Situation between United States and Ukraine, uncertain. War between Ukraine and Russia, uncertain. A war between Israel and the entire Middle East, uncertain. So there's been so many uncertain situations which have caused gold to push up higher. Then in addition to that, a lot of countries around the world have been increasing their gold reserves. Russia has been buying gold, Brazil has been buying gold, and in turn, the United States is understanding that they don't even have gold in Fort Knox, which is a gold place where they store their gold. Trump or Musk tweeted, I don't even think there's any gold there. So what's happening now is that like there's a lot of reasons why gold has been pumping. That's kind of what I'm trying to say. So gold is trending up higher, right? So personally, I just believe just trade with the trend. The trend is always going to be your friend. As simple as that. So I'm not a guy who likes to short in a market that is pushing up higher. Obviously, you can be dynamic and it can work for yourself. For myself, it's just not something I like to do. So what I understand here is that this again is my order flow, right? So my overall market structure on the weekly time frame, I have here a low, I have here a high. So this is kind of like the range that I'm trading inside of. I then just simply draw in the premium versus discount tool, and then I understand, okay, there's still demand open. There's still the 0.5 fib open, and the 0.5 fib is like my discount level. I call it the D. I always like buying at discount. I like buying cheap. I don't want to buy expensive in the premium, right? As simple as that. So you want to sell in premium, you want to buy in discount. So for myself, it would be ideal to see a little bit of a deeper retracement on gold before like really getting heavy into longs. But then again, you have to understand a market doesn't give a let's say a damn right about your feelings. The market will just push up higher if it wants to. So how can you understand that a market is ready to push up higher? Well, personally, I use a method called the change of character method. I very simply say look at market structure. So for example, let's say here you measure this impulse to this high, then you see a nice retracement. But if you measure this impulse to this high, then you see a very small retracement. But how could you have gotten into this impulse over here? Again, to this height, from this low to this high, again, like 0.5 fib is somewhere over here, or 618 fib, which a lot of traders use, is down over here. Like the market never retraced in towards there. So you would be missing out on a lot of positions. So what I then simply say is, okay, let's have a look at the daily. So on the daily time frame, what I see now is that we're inside a level of supply. This is kind of like your immediate market structure and your daily imbalance or your daily supply zone. Then drop down in towards the 4-hour time frame, and again you'll kind of see that there's an area of consolidation here, right? There's an area of consolidation. You see an impulse down, consolidation, impulse down, and now again you see a V-shaped reversal, and now you see consolidation. So at this point in time, I'm expecting either gold, obviously. It sounds very stupid when I say it, but I expect gold to go up or to go down, very obviously. But this is an area of kind of like indecision. This is where the market is going to start moving very impulsively from. So you don't want to like be trading within this range on the lower time frame, because you're going to get yourself caught up. So understand that once the market breaks out of this box, that's when you're going to get a massive impulse, right? Right? Like as we saw over here. So what you now need to do is either look and understand, okay, here there was also a small area of consolidation. From here, the gold is now pushing. So it makes sense because the higher time frame gold is bullish. That gold pushes up higher from this little demand zone. So now what I'm simply looking for is that market structure shift confirmation. So what I now see here is that we had, for example, these equal lows over here underneath. We had an area of consolidation over here, which again should lead to demand coming to the market. And now the highest probability play will come when we break market structure here. So now what I'm looking for is for this long position on gold. So I want to long it back up into like all-time high, with one, all the uncertainty that there is within the world. To two, take out these lows of liquidity, which did. Three, here we have the area of consolidation or the area of demand. Four, if you kind of like look at the overall impulse, it's retraced back down in towards discount price levels. And now to get that confirmation, just wait for the market structure shift and then yeah, potentially get in on a long.
Super, very clear, very clear. I mean, we've spoken about gold now. We have spoken about the dollar index. We've spoken about Euro USD. But there's still some need in the community for maybe only the targets you are aiming for at Aussie dollar, US dollar, and also the British pound against the US dollar. So I think let's check that out.
Yep, sure. Let's do it. So let's see euro, Aussie dollar.
It's one of your favorites. So
Yeah, no, definitely. Aussie dollar is definitely one of my favorites. Aussie dollar is actually even cleaner than NZDUSD. I'm going to keep it nice and simple for you guys. Obviously, I've talked about the dollar a lot now today, so no need to do that anymore. But what you can very clearly see here is that we have been trading in a range on Aussie dollar for a very long time. What I simply believe is that you always have to look at the range high over here, and you need to look at the range low. So this is kind of like the range that you're trading inside of. So what you will always see is that in a market that is consolidating, you'll move from the range high to the range low, as simple as that. So here, what we saw is that as soon as we grab the liquidity above that range high over here, the reversal down comes. Then what happens over here? We take the range low, and now I'm expecting the reversal up higher to come. So then what do I have in my toolbox, guys? What is the other kind of like tools that I have to understand that a market might be ready to reverse up higher? I identify again the market structure shifts. Okay, as simple as that. Because if you remember from earlier in the stream, I look at two things to understand if a market is ready to reverse after an overextended move, and that is one, again, S&D or liquidity, and two, MSS. As simple as that. So what we then have here is a liquidity grab underneath the range low. And then number two, here we see a market structure shift in the form of this internal high breaking, this being my low, this being my high. I look at the premium versus discount, the market retraces into discount prices. That is where you want to be buying. What I then did is I looked at the lower time frame, and there was some manipulation going on AUD USD, and it dumped here on Monday evening. There was again news that Trump was going to impose tariffs on Canada and Mexico of 25%, and that was going to go through on the day after, and that additional 10% China, blah, 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 tariffs, whatever. Again, this tariff news is just all temporary. I've said it many times as well in our Discord server of our trading community, like these news announcements, they make the market move for like a few hours, and then after that, you just see it's just manipulation. So what happened here on AUD/USD is you manipulate the low, you grab liquidity, everybody gets stopped out again, and then they all think, the market is bearish again. But you need to understand what the higher time frame is doing, what the higher time frame narrative is. And then what you saw here was I was kind of personally looking as well at this area of demand to push the market up higher. But now what I was looking at the day after was this demand zone to push the market up higher. And now I'm looking for AUD/USD to continue pushing up higher, to take out all of these descending highs. On the weekly time frame, it also makes sense to push up higher. I also mentioned on Monday, like just buy here on the weekly open. And then what you can just simply do is just trade the weekly structure on the fractal structure. Fractal structure is the structure of the individual candlesticks, and then just trade it back up into where? Into the 0.5 fib, which is over here. So looking for further upside on AUD/USD, and then you can see you can just swing trade this all the way back up for like 287 pips. Obviously, it feels like eternity, but yeah, all you need is one of these trades in a month, and if you then have $1 million in funding, right, it's like 30K, as simple as that. So that's how easy trading can be. Like obviously passing a challenge is a lot harder. But you need to have like the right strategies and the right knowledge to do so, which it took me 6 years to acquire. But yeah, you're making already a very good step by being here in the stream and listening to what we have to say. And I'm not saying it to be cocky, but it's like we know what we're talking about. And trading is it's my life, it's my passion, it's what I do every single day for at least 12 hours a day. So I'm just trying to give you the realistic version of it, and saying what it's actually like, to actually make money. Because again, the big guys out there, they're not making 10% a month, they're not making 20% a month. Some of these funds are making 12% a year. So don't try and be smart and make 10 times that a year, right? But yeah, that's what I'm looking
Sounds
at
great.
on AUD/USD. GBP/USD, we can also discuss. GU is very similar. At this point in time, it's bullish. It's breaking structure. Here on the daily time frame, we now have this as your immediate demand zone, and again, this should just continue to push the market up higher and higher on GU, and I don't really see it slowing down as of yet. We are kind of nearing a key level of supply here on the weekly time frame within this imbalance, which should cause some slowdown again after a massive candlestick. So looking for somewhat of a pullback very, very soon. If you want to trade a pullback, you can obviously do that. When do you expect a pullback to happen? One, when you grab liquidity. or when you tap into supply, which we've done, and now you need to go into the lower time frame, and then you need to look for a market structure shift. So for example, you need to look at the 4 hour or the 1 hour. Well, if you look at the 1 hour, you see push up, push down, 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 and now you're just seeing a push up again. So if you would want to see a short, you need to break this low and then start selling off, or you need to see another push up, and then this becomes your immediate low, and then wait for that low again to go, and then maybe you'll start seeing a correction where we'll start taking out all of these kind of like ascending lows where there's liquidity underneath before then, for example, reversing back up higher again. So yeah, that's pretty much
Very
that.
clear. Sounds good. And something that I really like about your strategies, also you just said you wait, right? You have your clear structures in the market. You wait for the price to, hit these targets to break the market structure, and then you get active, which makes it easier to not just overtrade and then just be active, like you mentioned before, like 12 hours a day. Always
Yeah,
seeing
definitely.
something.
Yeah, it's all
Yeah.
about being a sniper within the markets, guys. Again, there's no need to trade every single day. There's no need to take 10 setups. Like if you would trade, let's say 15 out of 20 days of a month, right? And you let's say win all of them, like you'd be up what, like 15 times 3, right? You'd be up 45% now. Like 45% a month, like every single bloody hedge fund on the entire planet is going to say, oh, you come and work for me. So who are you lying to, like if you make 45% a month, Warren Buffett, he would fly you in a private jet straight out to New York, and he would give you everything. He would give you an apartment and a $1 million salary, but it's not realistic. It's not going to happen. So don't kind of like pretend and sell yourself a dream that's not going to exist. Try and focus on the realistic gains, and that's just simply doing like 3% a month, and then you're already outperforming the entire market. Like I know people who would like who can give you serious money if you do 3% a month every single month consistently for over 12 months.
Absolutely. Absolutely. The focus not only, on your strategy, but also on the pairs like you have, just shown us. You're very focused on, Aussie dollar, NZD, Euro, US dollar. So you know what's going on. You look at the markets every single day. You spectate the moves, right? So you're always kind of in loop with the market, which is great. I've seen a lot of traders in the history, like just having 20 pairs. It can work. I'm not saying it's not going to work, but it's just very messy overall, right? And you have the focus, which is great. Fabio, to kind of like wrap this up, there was one very important point for me today and also for the community. You've shown us something today where like many traders out there struggle with, which is like integrating fundamental events and also the data in their trading. Like
Yeah.
you've made a very good connection how global events can influence commodities and the FX instruments. How do you approach this? Where do you get your information from? How do you structure your research? Because in a hedge fund, you have your analysts on the right shoulder, the risk manager on the left,
Yeah.
and they provide you with the information. But how do you structure your day, your week to do these information and research?
Yeah, great question. I think it's extremely important that you understand that Twitter is pretty much the main source for all information nowadays on global markets. It's obviously very degenerate in the sense that everything is just posted there raw and yeah, live and fast. Twitter is a lot faster paced, right? Because at the end of the day, my father always taught me like what you read has already happened. So you need to kind of like be kind of like as close to the action as possible. Now, I'm not going to fly myself out to the Middle East and experience a war zone, but I am going to kind of like go onto Twitter and read and listen to the people who are there, right? And who are tweeting it live, right? So that's kind of like as close to the action as you can get. So no, but like that's pretty much my number one source. And then what I do is that I go onto Bloomberg, I go onto Reuters, I go onto Forex Factory, and then there I understand, okay, what are like the headlines in relation to what is being said on the ground. So then obviously I also look and understand, okay, the US economy or the dollar index is dependent on a few certain factors. I understand that that is what drives the dollar up or down. And then in relation to that, you kind of have like the let's say the live effects, which I find on Twitter, Bloomberg and Reuters. And then on the other side, you look at like the fundamental aspect of it itself, like the internal or the itself, like the inflation, right? Surveys, unemployment, the money supply, like balance sheets of a government, like these kind of things is then what you look at from like the internal perspective, And then on the outside, you look, okay, what's happening on Twitter, what is being said, and what are those immediate effects, and how can they then kind of like support what my initial bias is on the internal side of things. So you need to kind of like make a list for yourself of the things that I just said. So surveys, inflation, and then inflation has four different forms of inflation. Surveys, there are kind of like four main surveys in the United States that you need to look at. So you need to look at like building permits. You need to look at the consumer sentiment index. Like there's a lot of different things, but you can find it all online. And then you need to look at those things, and then you understand, okay, like that's what's coming out. So let's say now at the moment, I was reading today an article about I think it was the Atlanta Fed Reserve, whatever, something. I read so much I don't remember it all. But they were saying like, okay, our GDP estimates, we're going to downgrade them from a 1.4% growth to a 2.8%. Like contraction, like like depletion of growth. I'm looking for the correct English word, but like a decrease in growth. So then you need to understand, okay, so what are then the inflation numbers doing? Like you need to kind of like grasp a whole feeling for it. But I would say like the main thing that you just need to keep an eye on is Twitter, and then look at like Watch Your Guru, look at Zero Hedge, look at these kind of platforms, like the tweets, read the tweets, and then the algorithm of Twitter will automatically just keep on giving you and feeding you with FX updates, and then you'll find good accounts by yourself.
That is awesome. Yeah, I think once you've like established the algorithms, like more and more valuable stuff will come your side. It was just the question with which kind of channels you would start. But yeah, I mean, you've mentioned it. From there, you can then go and find the reliable sources on X, which is great. So for everyone who joined after we've started the introduction, we've started this stream. Just to wrap this up, Fabio, where can people now go and find you? Just to make sure everyone knows how to get in contact.
Yeah, of course, guys. Make sure to check out the Trading Academy on YouTube. It's just literally called The Trading Academy, and you can also find us on Instagram, TTA Capital. And I'm there for all your questions any day of the week, and always happy to discuss markets, discuss money, and everything that relates to it. It's my passion, so the more we can talk about it, the better, man.
That's awesome. That's awesome. And also to the listeners, we also from the Trading Pit, we provide a lot of free value, not only on the Discord channel, but also here on YouTube. So make sure to leave also a like and a subscribe for us. And yeah, Fabio, it's been an absolute pleasure having you here with us today. So many insights, so many free nuggets. I mean, you are kind of famous through all your market updates on a daily basis to really share as much as you can. So thank you for doing this today in our environment, kind of, and man, sending regards to Amsterdam.
Yeah, thanks, man. Appreciate it, Jan Philip, and guys, big shout out to the Trading Pit. Thanks for having us. Make sure to leave a like on the stream, show some love in the chat, and the Trading Academy Discord is where I'm going to continue sharing the updates now, right after the stream. So make sure to be there, and let's continue the conversation next time very soon, and hopefully we can do some more market updates here on the channel, guys. And tomorrow there's going to be another live New York session as well on the Trading Academy YouTube. So look forward to welcoming you all there, and let's just continue to share more free nuggets. And I mean, there's enough money for us all, right? The market is a $6 or $7 trillion market a day in volume, so it's not like somebody's going to steal my money. So I'm more than happy to help as many people as possible. So thanks guys for joining, and I wish you all a fantastic day, afternoon, evening, wherever you are in the world. And pleasure was mine.